So in this video, we shall be talking about analysis of the time frames. Now we have already talked that in a certain script or a certain stock, it can be in a classic bull flag pattern or a bull flag pattern in one time frame, and it can be in a bear flag pattern in another time frame. Now this is the Bank Nifty, as you can see, and as you can see, this is a 15 minutes chart, and we are checking this in 10:30 of the time, which is like the midday. Our market is open from 9:15 to 15:30. So this is 10:30 and we are expecting it to break down, because in a classic bear flag pattern we expect after a downtrend which it fail, and after a retracement it will again continue the movement. Now the outcome is quite fantastic. As you can see here, we actually went right and the trade was shared in the live market time and we actually caught the entire move. Now again, come back to that, this is actually 15-minute time frame. Now when we see this in a hourly time frame, you can see that there is a bullish flag in formation. So we basically caught the short move of this tiny candle here, but we actually caught it. So anyways, this is a bullish flag in formation in hourly time frame, but this is also was a bearish flag in 15-minute time frame, just few minutes before. But right now there is no trigger, because as you can see, the upper trend line and the lower trend line is not broken at all. So our initial flags, lower trend lines, is broken after some time. Now what happens next? We shall be waiting for the trade here, right? Because our trade will trigger if low of this candle is getting broken while this candle is getting formed, which actually did not happen. So in that case, what should you do? See, this blue flag is getting formed and this has not triggered. This candle is also formed. In that case, we need to improvise. We need to shift our candle and we need to fix our flag, because the previous flag is actually invalid. We need to fix the trend line. The flag is consisted of the upper trend line and the lower trend line. So the trend line will need constant fixing, because the low of this candle is not getting broken in this candle. So we need to fix it. So this tells the story that flag pattern also is subject to the modification based on the conditions. Anyways, what happened next? It finally broke again the upside of the upper trend line. And by the time, as you can see, that it is already at the mid market, and you can follow this trade in this link here in the trading view, because trading view does not delete any trade after you post there. So what happened after? We are looking in the intraday, right? Because we are looking in the hourly time frame. So in 15:15 there is the trigger, so it does not make any sense to take any trade that time. So this trade actually did not trigger afterwards. So that's it. That's what I am telling you. So the trade triggers only and only at the confirmation of the breakout, which did not happen in this case as the market got closed. And even after the market closed, it actually did not happen afterwards also, because when the market opens in the next day, we need to again redraw it and reshift it, and after some time it actually went down. Now let me show you a live example of Reliance. So that was discussion of like a month before, I think. We have discussed this trade in February, like 3 months before. Now let's discuss about the Reliance. As you can see, Reliance right now, as we are making this video, is in a basic bear flag. Now if you follow the exact rules, obviously we will draw some line here. We'll again find the height here, and we shall be waiting for this flag to break, and after the break happens, we shall be making some target at very below here. So anyways, this does not matter because the flag is not broken yet. So what my main point is, the time frame analysis. So let me show you the same Reliance in monthly time frame. Now when you see in the monthly time frame, you can see actually that it is making a flag, but that is a classic bullish flag pattern, and it is actually in the middle of the pattern. Now some price action traders may argue that you can draw a support like this in horizontally, so that you can do also, because the support is getting tested multiple times. So that's what you are talking when you are talking mixing multiple theories. But anyways, this is in a classic bull flag pattern in a monthly time frame. Now if you see in the 5 minutes time frame, then you can see there is a bullish flag. So this is quite weird, right? Because in a 5-minute time frame you are seeing a bullish flag. Now see, this is getting like this, and this flag is not getting broken at all, because the lower trend line is very hard to get break here. Now this does not make any sense because no flag looks like this also, but we can also do this. Yeah. So as you can see in the 5-minute time frame, it is a bull flag pattern. In a 15-minute time frame, it is a bull flag pattern. It is bull flag pattern in a 30-minute time frame. The same can be told for the hourly time frame, but when you are getting in the daily candle, it is only one candle. It does not make any sense. So we are again removing our drawing, and then you can see there is a classic bear flag pattern. So that is the most wild thing about this whole price action. So there is only bear flag pattern in the daily time frame, but in the other time frames, you can clearly see there are bullish flag patterns. So that is the most wild part about the price action and the time frame. So the time frame is a property of the whole pattern, and the pattern can be actually defined in the different time frames. So we need to treat different time frames as totally different thing.